How do you finance your car purchase? Now that you've decided whether you're buying a new car or a used car, how do you pay for it? That's what we're talking about in this video. So stay with me. Hello friends, welcome back to my channel, The Bulletproof Life, where I share information, tips and hacks to help you take control of your personal finance and build the bulletproof life you deserve. My name is Ronke Odewumi and I'm delighted to have you here. If you are new to my channel, please take a minute to subscribe by pressing the red button on your right. Don't forget to press the bell so you can get notifications every time I share a new video. Let's get right into today's topic. How do you finance your car purchase? What are the options available to you? I'm going to be running through about 6 options. So here we go. The first option for financing your car, which is the cheapest option also, is cash. That's the cheapest way to pay for your car. You go into a dealership, you put your cash on the table, either on your debit card or actual cash, and you pay for your car and walk out with your car. Now, if you decide to pay for your car with cash, I would advise or I would suggest that you put some of that payment on a credit card. This is to allow you to get credit card protection for your purchase. When you put some of that payment on your credit card, the credit card company becomes jointly liable for that car with you. So if anything goes wrong, you will be able to recover your money. So the cheapest, easiest way to pay for your car purchase is by paying cash if you can afford it. Now, let's say you are not able to afford to pay for your car, with cash, but you still want to purchase a car. The second cheapest way or the second best way to pay for your car purchase is through a bank loan. Now, when you go for a bank loan, you are likely to get a good interest rate based on your credit score. You can apply for a bank loan from the safety of your house online. And if you're in a country where you can't do that online, you can easily go into a branch of your bank and apply for a bank loan. Please do not apply for a bank loan and secure it with your property. Don't secure your bank loan with your home because you are liable to lose your home if you are unable to make payments. So second way to pay for your car is through bank loans. Bank loans are not the same thing as payday loans. So please do not confuse bank loans with payday loans or attempt to purchase your car with a payday loan. Now, once you have your bank loan, which is likely to get into your account the same day as it's been approved, you can then go over to your dealership and make your car purchase. You've got a good interest rate, you can go ahead and buy your car. The third way you can make your car purchase is through a social lending platform or a social loan, peer-to-peer lending. And there are quite a number of them these days. There's something called Zupa in the UK, which is also a peer-to-peer lending platform. It's a bit like a bank, but you are likely to get a cheaper interest rate from them, but you will pay interest on it because it's a loan. And it's also something that gets approved quite quickly. And once you get that, you can then use that fund to purchase your car. The fourth way to buy your car is through credit card, just by paying for the whole car on your credit card. This is going to depend on your credit score and how much funds you have on your credit card or what your credit allowance is on your credit card. So obviously, if your credit allowance on your credit card is just £4,000 or $3,000, that's how much you can afford to spend on a car. So paying for your car purchase with a credit card is the fourth option that you have. However, this can be an expensive option depending on what kind of interest rate you have on your credit card. Please check the interest rate on your credit card. Before you make your car purchase with a credit card, it's also important that you check the payment terms on your credit card. Is it an interest-free credit card? Is the interest going to go up at a point? What's the APR on it? You need to check and make sure that you understand the credit details of your credit card before you use it to purchase a car. This is the point that I really need to make, is that as you purchase your car on credit and it depreciates, your loan is still there. Your loan and your credit card payments are there and they're not reducing. You're paying interest on a purchase that is depreciating. That's just something I want you to bear in mind as you purchase your car. So if you've bought your car on a credit card or a bank loan or a peer-to-peer lending platform, please be aware that you're paying interest on a purchase that is depreciating. So I've talked about 4 different ways you can pay for your car now, with cash being the cheapest option so far. The next option you have for purchasing your car is called the PCP, which is the personal contract purchase. And it's when you make installmental payments and a deposit over a period of time, and at the end of which you get to keep the car when you make a lump payment. So let me explain that further. At the time of purchase, you'll be asked to make a deposit. It's usually low, a very low deposit, which is part of the price of that car. Then a period of payment is agreed, say 24 months or 36 months. Over that period, you will make monthly payments. Once that period is over, which is the term of contract, you will be asked to make a lump payment, which is the remaining value of the car, and it's called perceived car value, which is then what you pay in order to own the car. Now, if you decide you do not wish to own the car at the end of the 24 months or 36 months period, you just simply hand over the car keys and you walk away. Or you can choose to enter into a new contract, a new car, another set of 24 months or 36 months payment, a deposit, and you are good to go. Now, with the PCP method of payment, there is a limit to your mileage. So they put a limit on how much mileage you can use in a year or in 2 years or in 3 years contract period you've agreed. And if you go beyond that mileage, you're going to get charged. In addition to mileage limit, there is also an expected level of wear and tear. So if the car has more than the expected level of wear and tear and you decide not to buy it, at the end of the contract period, you will be charged. So these are two things you need to bear in mind if you decide to use the PCP method to purchase your car. The benefit of the PCP method that I see is that there's very little deposit. The monthly payment is usually low. And at the end of 24 months or 36 months, if you're tired of the car or you are bored with it, you can change your mind. You simply hand over the car and walk away. So this particular method is very popular with a lot of people. It's a cheap and easy way to get to use a brand new car. It can also be used for cars that are not new, but a lot of people use it to purchase brand new cars. The sixth method is the hire purchase. Now, with the hire purchase, it's very similar to PCP in that you pay a deposit and a monthly payment over a period of time, which could be up to 5 years. So unlike the PCP, which is usually 2 years, 3 years, the hire purchase is up to 5 years. Now, the difference between the PCP and the hire purchase is that with the hire purchase, there is no mileage limit. There is no wear and tear limit or wear and tear payments or charges. They simply split the whole value of the car with interest over the 5-year period. So you have more payments to make monthly, but at the end of the 5-year period or 3-year period or whatever period you've agreed, there is no lump payment. The car is yours. Once you complete your last payment on the last day, the car is yours. The car is not yours until you've made the last payment though. So you need to bear that in mind when you do the hire purchase. The thing with the hire purchase though is that the monthly payments are usually higher. But if you are somebody who doesn't want to think about mileage limits, you don't want to think about wear and tear, you want to enjoy your car and just feel free with it, hire purchase might be the one for you. Now, the last method I'm going to talk about is not really a purchase, but I'm going to talk about it because it's a good way to drive a new car. It's a good way to purchase or own a new car temporarily. And it's called the PCH, which is the personal contract hire. With this method, similar to the PCP, you pay a deposit and then monthly payment is agreed over 24 months or 36 months. At the end of the 36 months or the 24 months, the car is not yours. It's a personal contract hire. You have to hand over the car back to the dealership where you carried out or you entered into the contract. So with PCH, you're simply getting to use the car without having to own it at the end of it. Now, a lot of PCH contracts include maintenance, servicing, and all of that. So you don't have to worry about any of that. You just jump into the car, you drive it, you use it for the 24 months or the 36 months, and you hand it over back to the dealership and you go on your way. Which is why I said it's not really a way to purchase a car, but it's a way to own a car temporarily, which is good for new cars. And frequently, there are PCH contracts that are quite cheap and give you value for your money when you consider how much new cars depreciate. So now I have run through the different ways you can purchase your new car, you can fund the purchase of your new car or your used car, and you can enjoy it without feeling a lot of pressure. Now that I've talked about how you can fund your new cars, there are some points I would like to make just so for you to bear in mind as you go after your car purchase or as you make your car purchase, because the whole idea of this channel is for us to build bulletproof lives. It's for us to be in control of our personal finance. So I need to make these important points so that there's something for you to bear in mind as you make that purchase. One, your car purchase is an expense. I know I say this a lot, but I need to reiterate it. It's an expense, it's not an asset, and it's something that you need to bear in mind as you make your car purchase. Two, there's something called the 24 rule. And the rule is that when you make a car purchase, you should endeavor to have 20% of the deposit for the car. And you should try not to make the car payments go over 4 years. And I think that's got to do with the human side of us, that after 4 years, the payment can become a burden. And once you've put down 20% of the car, it also reduces your monthly burden. So bear the 24 rule in mind. The third thing I want you to bear in mind is that your cash purchase should not be secured against your property, because you can lose your property if you don't make your car payments on time. If you don't have enough to purchase your car with cash, please put down as big a deposit as you can, and then you can put the rest on an alternative method of financing. Remember what I said about the 24 rule? So please try and make as big a deposit as you can afford. In purchasing your car, remember, it's not an asset, it's an expense. I'm really banging on about this. So please do not deplete your emergency funds in order to purchase your car. If your car is going to deplete your emergency fund, maybe you need to go for a cheaper vehicle. You need to check that you can afford the monthly payments. So sit down with your budget, plug in the monthly payments for that car, and look at how it affects your finances before you decide to sign that contract. Also, you need to be aware of extra charges. I mentioned earlier that if the wear and tear is excessive, you will get charged for that. If the mileage is exceeded, if your car has a 6,000 mile per year mileage allowance, and you go over and you say 7,000 or 10,000 miles, you will get charged for that per mile. So please bear that in mind when you purchase your car. The final point is that if you don't make your payments, you can lose your car, and that can really disrupt your life. So again, be sure you can afford the monthly payments before you buy your car. One last point, if you have a bad credit score, then a bank loan or PCP or PCH or any of those methods where they will check your credit score might not be the best for you, because you won't get a good interest rate, and using cash might be your only alternative. I hope you've enjoyed this short and sharp video. I hope it's made sense to you. I hope you now know all the ways you can finance your car. Thank you very much for watching this video. If you haven't subscribed to my channel, please press the red button on your right. Don't forget to press the bell. I really love it when I put up a video and in the first few hours you've watched it and you're sharing your thoughts with me. Don't forget to share this video with your friends. Let them also share their thoughts with me, and let's build a community of bulletproof people. Until my next video, you take care of yourself and keep living that bulletproof life. Bye.